Okay, good morning, everybody. Chris, is that picture off the screen?
I see the picture.
You still see the picture
I see
Yeah.
the picture.
of the gap person? Show screen, it says. So stop showing screen. That's good. That would do it. I was pausing it. That's why you kept saying it. We'll get this down. Okay, so it's 8:30. See we have 150 people already in the room and waiting for a few more to come in. We've increased our count so we can have over 100, so we don't have to wait like we had to last week. I want to welcome those that are here and those that will be coming. I want to open up by saying that I hope that everybody is safe and their families are safe, and I hope we continue to get through this together. When we start out, we like to try and give a little bit of a sound check. So if everybody could just say what town they're in the question section, it lets me know that people can hear what I'm saying. So we'll give just a second for people to do that. You should see a question section. Okay, not that I judge, but I do look at the towns. And then if I find out what town you're from, I'll answer, and I like it, I'll answer your question. All right. Oh, we got Scottsdale, Chris.
Like
That's
Scottsdale.
Yep.
Yeah, Scottsdale's great. Okay, good. Looks like we have sound. You know, during these sessions, a lot of times we'll have people say that they don't have any sound and they're not hearing, and they're usually one or two off. So check your computer. Sometimes, you know, there is bad connections that go through. It's very possible. But we do watch to see if people don't have sound. If I don't respond to you, it's because it might just be one person saying it or not. That's the point. So, all right. So we've got a lot of people responding, which is good because it shows that we do have some sort of audio going out there. Today's topic that we're going to be covering continues on with the whole COVID matter. Today is going to be focused primarily on the SBA programs. There's two out there right now we're going to focus on, and one of them we will be touching on, another one we will be going into a lot deeper. We will have 4 polling questions again like we've had in the past. We do that because some people would like to try and get CPE out of this, and in order to do that, we do have to do polling questions. Also, I try and build the polling questions to get a little bit of information about the listeners to make sure that they are to see how they can share the information. They're not scientific, Quinnipiac in any way, but it's just to get a feel for some information out there. We have already, there is a question box which you see, which you typed your information in, and I'm sorry, somebody typed a question already. What is CPC? So if you have questions as you go along, the presenters will be talking. I'll be reading the questions and try and find some to present to them. We may not get to all the questions, and I apologize for that, but all the questions do get logged, and we will look at them another time. We've already received questions either from people via email or other ways, and we've tried to make sure that some of that information will be included in the presentation. So if you can give the presenters a little bit of time to work up and go through the presentation, they may answer your question before we get to the questions at the end, which we will leave time at the end for for questions. And please don't repeat your question over and over because it takes away from other people. We are recording this section. We recorded a session from last week, and a nonprofit group had a presentation yesterday afternoon that was recorded also, and they will be available up on our website. Before I show the presenters, I am going to put out one poll, the first polling question. The first polling question, how has the situation affected your business? So if you can just take a second, answer the polling question. I'm going to wait till I get to around 90%, and then I'm going to close out the polling question. And again, this is just to make sure people are still hearing me and to get a feel for what's impacting the organizations and to share with everybody. We're up to 65%. Help me get to 90. The quicker we get to 90, we move on. Vote twice, like it's Union County. Okay, we're 84. I'm going to close it out because it's almost at a minute. Share the results, and we'll see how is it affected. 49% said slight decrease, 45% said significant decrease, and 6% said increase, which is good for you. We're jealous of you. So at this point, we're going to move on to the presentation. We have two presenters today. These two presenters have spent an inordinate amount of time researching and looking into this topic. I give them credit for all that they've done with this. We have Mark Weber, who's a partner up in our Woodcliff Lake office. And the other presenter is Chris Martin. He is a senior manager in the Livingston office. And again, they have done a lot of research. They're going to talk about the topics as they've gained information from what they've read and from who they've spoken to. You're going to find out, though, that there are no clear answers in some of the information that they're presenting because they're getting conflicting information from multiple sources. So with that, I'm going to turn it over to Mark first. Mark?
Thanks, Brad. Good morning, everyone, and thanks for coming. And yes, I am coming to you from the epicenter of COVID-19 in New Jersey, Bergen County. So I'm not carrying it, and I can't give it to you this way. I am social distancing, and I am, just like all of the broadcasters we see these days, working from home. So I want to talk about a brief overview of what we're looking at here. As we know, last Friday, President Trump signed this act into law, the CARE Act. And it's voluminous, and there's many, many provisions that affect businesses. Today, we're going to focus on primarily the Paycheck Protection Program, but we will talk briefly about the Economic Injury Disaster Loan Program and sort of compare them a bit. Brad mentioned the fact that we've spent a lot of time researching this and working on this over the past week. And I want to thank everybody who's worked on our team with us. And at Sobol, we took an approach which was to carve this act up into many sections and set SWAT teams together to work on them. And Chris and I have sort of led this PPP program along with one or two others. And as Brad mentioned, we know a lot, but there's a lot we don't know. And every day there seems to become coming out with more confusion, whether it be from the Treasury, the SBA, or the banks. So one key factor in these programs is, in just a brief overview contrasting them, is that the Paycheck Protection Program, which I'll refer to now as PPP, is being administered by the banks and then going to the SBA. The Economic Injury Disaster Loan Program is being administered straight up by the SBA. So a lot of the banks are supposed to be getting guidance from the SBA and providing guidance to the borrowers. And what we've been finding with the banks is that some of the big money center banks are gearing up, and they say they're going to be ready to go. I believe at 12:01 this evening, because it starts tomorrow, and we'll talk more about that in a second. And some of the banks don't seem to have a clue as to when they're going to be ready. And they say, we hope to be ready by next week. Meanwhile, April 3rd, they came out the other day and said that April 3rd is the date that you can file if you're a business or if you are a sole proprietor. You can file on April 3rd. If you're an independent contractor or self-employed, you file on April 10th. Okay, so April 3rd being Friday means that the banks would have to be ready. As of yesterday's close of business, very few banks had anything out there. Some of them are taking preliminary information, and that's about it. They're saying, here, get ready. Now, our message to all our clients has been, get ready, because when the gates open, you want to be there. So we'll talk later about some specific things that we know you need, and then I'm going to say that everything else is up to the bank. We're getting information from one bank saying one thing and another bank saying another thing. We'll talk more about that after. So just in general terms, okay, let's talk about these two provisions. The EIDL, which I'll talk about very briefly, is really just a straight up loan, okay? And the way we see this is that this is applicable to a business that doesn't have borrowing out there, that is going to need a loan to carry them for a long period of time, and they could go out and borrow this at a pretty low rate, 3.75%, and there's a 30-year payback. However, this loan is, if it's over $200,000, it's going to require personal guarantees. It requires the typical process of a loan that you would go through. They're going to require financial information. They're going to a lot of financial information. They're going to look at credit worthiness, security, collateral, etc. So this could be very attractive to some companies, but for others, we think the PPP is more attractive. The overview of the PPP is that you could borrow up to $10 million. It's 2.5 times the employer's average monthly payroll costs, and we'll talk more about that later. In fact, Chris is going to walk you through some examples. The big beauty of the PPP program is that there's a loan forgiveness provision. Generally speaking, it's 8 weeks' salaries plus several other costs incurred during the period. So the period is after you get the loan. So let's say they open up the gates on April 3rd and you get the loan next week on the 10th, and then they're going to look at the 8 weeks following that to do some comparisons to make sure that you've retained employees, that your payroll levels are the same. And assuming they are, then there's a certain amount of forgiveness that'll be available to you, which we will show you more about later. The Act says self-employed individuals can qualify, but that's a very gray area, and I know we've gotten a lot of questions about that, and I've gotten questions from clients about that. It's a gray area because the Act defines, it says eligible self-employed individuals, and they define that in a very specific way, which relates back to the 2 acts ago. There's the Family First Act, and then there was the Emergency Coronavirus Act, where they were providing benefits for employees who were being quarantined. And they're basically saying, if you meet that definition, then you qualify here. Now, a lot of commentary out there has said that self-employeds qualify. So we've gotten a lot of questions, and we handle a lot of professional service organizations. So do the partners in the partnership qualify? Do the partners at Sobel qualify into that calculation? And right now, we're not 100% sure. And I will tell you that the banks, in the information that we've seen them requesting, nowhere are they asking for that kind of information. So I think we're going to get more clarification on that, but right now we don't know.
Hey, Mark, somebody was just saying that you slid out on them during that, and I just wanted to emphasize what you're saying is that there's really no clarity as it relates to the self-employed individuals right now. You know, you're hearing one way, there were other programs you're hearing one way and the other, but it's really unclear right now. And somebody had just said that they lost connection with you when you were making that statement. So.
Yes, that's correct. A couple other key points is that we've seen some changes from what was in the act, the literal reading of the act, and we spent hours and hours and hours going line by line, word by word through this act to try and get literal meanings. And I will say it's not very well drafted. So in the act, they said that the PPP loans would be paid back over up to a 10-year period at 4%. And when the guidance came out from the Treasury the other day, it says 0.5% payable over 2 years. That's very different. Couple other key things here. There's no SBA fees, and all lender fees are being paid by the SBA. Now, you could have some other third-party fees. There's a limit they have if you use a broker, an agent, what they could get paid. And you could have some other third-party fees like processing, documents and things like that, but it should be very insignificant. And on this forgiveness piece, another key factor is that whatever is not forgiven, and that's where you're paying 0.5% over 2 years, whatever is not forgiven could be deferred up to 6 months to start paying, although they do say you're going to accrue interest during that time. Just an overview in terms of who qualifies for this. Businesses that are in operation as of February 15th, 2020, less than 500 employees, that's key, okay? There is a provision for certain types of businesses, usually in the hospitality, food service businesses that have more than 500 and franchises. Nonprofits qualify, except nonprofits receiving Medicaid are not eligible. Another curveball we got the other day with the application. So nowhere in the act did it say that foreign-owned businesses could not participate in the act. However, the application that is, quote, a sample, the Treasury issued it, but the SBA has it listed as a sample. The application indicates that that any owner more than 20% of the business must provide information, must sign the application, must initial all the certifications, and if that owner is not a U.S. citizen or resident alien, qualified, meaning green card, then that business cannot borrow. It cannot participate in the PPP program. Now, again, I bit through this statute with a fine-tooth comb, and it says that nowhere in the statute. Yet that's what's on the application and instructions. So that sort of remains to be seen. So that's a basic overview. Now I'm going to let Chris take you through how to calculate the amount of the loan and the forgiveness, and then we'll talk more after about the loan proceeds and what you can use it for and so on.
Hey, before we jump to Chris, before we jump to Chris, a couple quick questions, Mark. When you were talking about self-employed individuals, you're talking about the company, and this may go over to Chris also, and kind of tells you the type of questions that we have that's out there. As it relates to the compensation for the partners, members, guaranteed payments, distributions, is that part of the calculation? And Chris, I don't know if you're going to address that, or if that Mark was referring to that as part of his questions or his comments. Sorry.
Yeah, I mean, I think it's still unclear as far as the guaranteed payments and stuff. We've reached out to banks to see what their thoughts were, and we still haven't gotten clear answers from really anybody we've talked to. Some people's feeling is yes, others still not sure, wait and see kind of thing. But I would say to have that information ready and available, in the event that it can be included.
and distributions, I imagine, would be excluded, which is interesting because we, from Jeff Peskin in our office, we get all these mail or emails telling us how how members cannot take salary. And now all of a sudden we're going for the loans, and because they can't take salary, now it's going to potentially affect them. Sorry, Mark.
Yeah, and that's an issue. What sort of makes people want to think back and do a check the box election and make an S election and start having owners take salaries. But I don't think personally that the act intended to limit this against certain, partners. I mean, if we take a law firm, for example, and an accounting firm, but a lot of professional service firms, and they have equity and non-equity partners. Essentially, the non-equity partners, if assuming they're not on W-2s, they are, treated like employees. They're a profits interest. They get, and they don't even really necessarily get a piece of profit. They're determined what their comp is, but they receive it on a K-1, not on a W-2. So why shouldn't they be considered employees?
Right. At a 1 week life.
Oh, somebody's talking. The statute. Yeah, you got somebody in your rafters, Brad. The statute isn't really clear on that. Now, one thing we've seen from one of the banks we have not seen anything for the banks that talks about the partners and those who receive K-1s or draws, so on. We have seen from the banks is when they talk about independent contractors, because the statute says independent contractors, but it's not really that clear. And what we've seen from one of the banks is they say if it's an independent contractor who provides services to you who would otherwise be an employee, then they count. So, for example, if here at Sobel, we used a per diem tax preparer, and let's say that was a CPA who had his own practice and was trying to supplement his practice, and we paid that person during tax season as an independent contractor. To me, that person qualifies because he's providing the same services that our employees provide, except he's not an employee, so we would include him. On the other hand, if we're using our outside technology firm, well, that wouldn't qualify, or an outside actuarial firm or an outside plumbing firm, those don't qualify. So I think, that's one aspect. And then how those people work on this is a whole nother story, because in the statute, it talks about independent contractors, and it talks about sole proprietors, and it talks about self-employed. And I ask, well, what's the difference?
Right. Sorry. So Chris, sorry for interrupting. I do have one other thing. Sally would yell at me because we've been using it a lot. SBA stands for Small Business Administration. Somebody had the question. So go ahead, Chris. I'm gonna run your slide too.
So I'm going to take you guys through a kind of down and dirty calculation of how the loan is calculated. Overall, it's really not a difficult calculation, but you do need some different pieces of information, not just payroll. It also includes some other things like commissions, health insurance, retirement benefits paid, and then there is a small piece for state and local tax assessments as well. That's not FICA and Medicare. We're talking at the state and local level, that portion of the payroll taxes. So you take those costs and you take the average for the year. Now, the banks are asking for the prior year, 2019 payroll for that. Originally, when we were looking when the act came out, the look back period was April 1st of 19 through March 31st of 20. So we are advising a lot of our clients to have both sets of information ready, just in case the bank turns around and asks for that period instead of calendar 2019. So then you take the payroll cost for the year, the average monthly payroll, multiply that by 2.5, and that gives you your loan amount. So it's all of those components in the payroll cost there on the slide times 2.5, and that'll give you what your potential loan amount should be.
Now, Chris, I think you started mentioning this, but I was reading something, so I apologize. If a business wasn't around for the full year, so let's say they started June of 2019 or May of 2019, what would they do?
So they're going to be looking at a period from January 1st of 20 to February 29th of 20, and taking an average of that instead.
January 20 through February, so 2 months.
Yep.
Okay. All right. So you wouldn't go back and look at from 19 through whatever and take that average, mean or median,
Right.
whatever. Okay. All right. So I don't know. Do you have any other particular topics? Otherwise, I could start going to questions.
So we can
Is-
we can go right into the forgiveness portion of it.
Okay.
Mark,
Well, I did have a quick question for you. You mentioned taxes. Is it federal taxes or federal payroll taxes or just state taxes?
It's payroll taxes, state and local payroll taxes.
Just state and local, not federal. So not Medicare or FUTA. I can't think
Correct.
of any other federal ones. Okay. I know our core services would be mad at me for not being able to just rattle them off like that. So, okay. So, there are going to be a lot of questions. I'm reviewing the questions, and I will ask them of Chris and Mark in a little bit. Before we go on and get to the debt forgiveness, I'm going to launch the next poll. I said I'm going to try and get through 4 of them. So if you could just look at the next poll, are you considering an EDA program? Obviously you are, that's why you're on here, but I just need to be able to ask some questions.
That's New Jersey.
No, New Jersey EDA, not SBA. Stephanie said, explain that again. I don't know what Stephanie you're referring to. Stephanie posting a lot of questions, so it's tough for me to follow all through them. So, okay, I'm going to close out the poll. We're at 70%. Close it out, share the results, and you will see that 48% of the people said they're considering the EDA, New Jersey EDA program. 19% said no. 18% haven't heard of them, and 15% said it doesn't apply. A lot of New Jersey EDA will not apply to many of the organizations because of the size. New Jersey EDA doesn't have a ton of money available out there, but I do recommend people look on the New Jersey EDA site. If that was my area to research stuff. If anybody has any questions, email me and I'll send you a link to the EDA site, but this is an SBA program. So on to debt forgiveness. Are you guys going to talk about also which banks are participating and anything like that? Not specifically naming them, but just about them.
Sure. I mean,
So,
it's SBA qualified banks, and actually, it's a good question, Brad, because if a client uses an SBA qualified bank, that's great because the banks will take care of their customers first. If you don't use an SBA qualified bank, and I've run across several clients that don't, now you got to go to an SBA qualified bank, and it's sad to say, but you're going to get to the back of the line. They're going to take care of their customers first because the banks are inundated. The banks are scurrying around. They're trying to get the technology done. They're trying to find out the answers to all the questions everybody's asking. And we've seen things come out from banks where they say, don't ask because we don't know. When we know, we'll tell you. So if you don't have an SBA qualified bank, I think, you may have a tougher time here. And again, even with the SBA qualified banks, some of them are being much more proactive than others. And some of them just have the ability beyond the others. I mean, I think some of the big money center banks in this case, they just have better technology or the ability to put people on this faster.
Okay, thank you. Okay, forgiveness.
So
Yeah.
for the loan forgiveness, what they're going to be looking at is the 8-week period following the date of the loan disbursement. So during those 8 weeks, there's certain costs that will accumulate to come up with that amount. Those include your payroll costs, rent, utilities, payments of interest on the mortgage obligations, just the interest portion. And there's a kicker there that was added, once these applications and more information came out this week, and that the non-payroll costs can't exceed 25% of the total loan that's going to be forgiven. So that's an important piece of this as we calculate it. If you want to move on to the next slide, Brad.
The example, right?
Yep. So we've got a couple of very straightforward, simple examples here just to kind of walk you through it. The first one, Company X maintains its payroll for the 2-month period following the disbursement of the loan. And we're basing this off of the last example with the $250,000 loan. So they have $100,000 per month. They've paid rent of $10,000 per month, and utility costs were $5,000 each month. So the total forgiveness in that case would be the $230,000, and that's just the accumulation of the payroll costs and those other costs over that 2-month period. Now, going back to the 25% cap on non-payroll costs, we'd be okay in this situation because the $200,000 of payroll is more than 75% of the total forgiveness amount. Now, on the flip side, if payroll costs actually decrease during the period, which, we're talking to a lot of clients where they're not sure what they're going to do during this period. Things may be okay now, a little bit more uncertain over the next 2 months, obviously. What if payroll costs decrease during that time? What if we can't maintain? So if the payroll costs decrease to $60,000 per month, rent and utilities, $20,000 on the rent, $10,000 on the utilities, respectively, then the loan forgiveness would be limited in that case because the rent and utilities would be more than 25% of the total forgiven amount. So you'd be looking at $180,000 in potential loan forgiveness, the payroll, rent, and utilities combined over the 2 months. But since the utility costs alone are more than 25%, that would be capped at $160,000.
Okay. So we do have a lot of questions coming in, and I anticipate that that's a majority of the presentation that you were going to go through. As I said, a lot of questions have come in. Of course, they started out, and I'm sure that the forgiveness ones will be coming in very shortly, but some people have just been slamming with questions. So some of the questions that relate to is, we haven't gotten to the application process either, and when this is going to go through, because we saw that in the past, from some of the other emails, Chris or Mark, that people are asking how long is it going to take for the banks to approve these?
Well, what we're hearing,
Right.
he had faked. What we're hearing is that the banks are being pushed hard by the Treasury to move this process along. And we're hearing that the banks have been told that when they get the applications, they're supposed to move them as quickly as possible. And they review it, they do the calculations, and that's important. So the banks are the ones doing the calculations, not the clients. And the bank will do the calculation, determine the amount, and then they send it on to the SBA. If the SBA approves it, they're supposed to disperse the loan either the same day or the next day. Now, that's what the Treasury is telling them. Do we believe that? We know how these things work, so we tend to be skeptical there, but that's what they're saying. They say they want it very fast turnaround. They want the money out on the street as soon as possible. Now, anybody that's seen Treasury Secretary Mnuchin speak on any of the programs, whether it be this weekend or during the week, and any interviews, That's basically what he's talking about. He's talking about getting the money to the people as quickly as possible.
Okay. As it relates to the banks, we've spoken with a lot of banks. I know Mark reached out to some banks personally, and we actually tried to get some banks to come onto this presentation. And it's difficult for us to try and pick a particular bank because we don't want to look like we're favoring anybody. But I will say it was pretty much across the board that nobody wanted to participate in the process because they're still so unsure of what the answers are going to be, and they didn't want to take a position in any way. Do you think that that's an accurate statement, Mark?
Absolutely.
Right.
The banks are scurrying. I've seen things come out from, we saw the head of business banking from a very significant bank send something out the other day that basically said, we have more questions than answers. We know what you know, and we'll get back to you as soon as we know more.
Right. So, all right. So I'm going to, just to catch back up, I'm going to launch one more poll. We have two more left. I'm going to launch one more, give you a chance to catch your breath, give them a chance to catch their breath. A couple of questions that come in while the poll is going. I'll tell you guys. Is there a calculation of the loan forgiveness? Is there a calculation of the loan forgiveness related to the employees? I believe related. It's not clear the question. Harry, if you could just ask that question again. I think something got cut off when it came through. I will move to the next one. Yeah, I found it. Is there calculation on the loan forgiveness related to employees I have already laid off? And if you can think about that one, and another one, can rent expense be included if on a month-by-month basis?
Yeah.
Okay, I'm going to close the poll. Well, before you answer, how long do you think it'll take for your business to recover? I'll share the information. 3% said 1 month, 42% said 3 months, 52% said a year, 3% said already ahead. I got to figure out who these people are that are already ahead. I'm gonna, if they're public, if they're not our clients, we'll invest in the stock.
Food businesses.
Supermarkets.
Right. Food. Okay. Touche. All righty. Is there a calculation of loan forgiveness related to employees that I've already laid off? I don't know if either of you have a answer for that.
Well, I think that the issue there is it really depends on the look back period. So if the look back period is calendar year for last year, then those employees were included in the loan amount. Now, when you look at the forgiveness period, they're not going to be included there. And that's an important point, is that the loan forgiveness, there's two issues there when it comes to employees. One is the head count, which is done in what they call FTEs, full-time equivalents. So if there's a reduction in the head count, in the full-time equivalents, then the forgiveness amount will be reduced ratably equal to the reduction in the head count. So assuming the head count stayed the same, but you reduced your employees' wages, okay, you said, hey, everybody's taking a pay cut. That's the other test, where if the wages are reduced, you can have a reduction. Now, the threshold there is 25%. So if the wages are not reduced by more than 25%, you're okay. If they're reduced by more than 25%, it's the excess over that 25%. Now, depending upon when they do this look back period, if you laid somebody off in the beginning of this year, let's say in March, and the look back period is April 1 through March 31st, that layoff might actually sort of help you, because it'll bring down, while it's going to reduce your potential loan, it'll help you on the forgiveness side, because it's going to bring down your average monthly payroll costs, but it also will bring down your head count. And then you compare it to the 8-week period, it might not be as bad. If it's a calendar year, you're going to have a bigger problem.
Okay. Chris, we had asked about the rent. I don't know if that applied to you. Do you include the rent as part of your, I guess, the 25% if it's on a month-by-month basis still? I don't see why you'd have, it says, can rent expense be included if on a month-by-month basis? I don't know why that would be precluded.
No, yeah, no, I don't, no, that wouldn't be precluded. Yeah,
Okay.
you just take the 2 months of rent during the 8-week period we're talking.
I know that you and I, the two of you and I have had discussion, not even in preparation of this, but really relating around a particular client of mine. And we went down the rabbit hole. And that's the problem with this whole matter is there are so many rabbit hole wormholes that you can go down. And it started with a discussion of our temps included. I think our position would be that I would tend to exclude them. Is that what you were, I think that you had originally thought, Mark? Or you said that we would exclude the temps, or am I misstating that?
No, you're not misstating it. I think in your example or your client's situation, they had temps that they used, and then they were concerned if they don't use the temps, if they're not still. So it's my feeling that if we're using temps, they could be included depending upon, who you're paying and so on, if you want to use them in the loan calculation, because temps are payroll costs basically. However, let's say you were using temps because you were super busy last year, and now this year you're not going to be as busy. If you don't include those, if you don't have the temps in there, that's going to affect your ratios in terms of potential FTE headcount, and as well as the dollars, the payroll cost dollars. So then you might be getting a loan amount based on this inflated wage with the temps, and you're going to be forgiving a lot less. The forgiveness will be less. So now you're going to have that loan that you have to pay back in 2 years. If you don't want to be burdened with that, if you don't want that money, then I would exclude the temps. I think you could include them if you used them in both periods, but I don't think you'd be required to include them.
Okay. So here's another one relating to payroll. Can you reduce your payroll during the 8 weeks to help cover the other expense as long as you don't go over the 25% non-payroll costs?
Say that one again?
Yeah, that's
Sure. Can you reduce your payroll during the 8 weeks to cover other expenses as long as you do not go over the 25% non-payroll costs?
I would think
if you reduce your payroll, it's going to potentially affect the amount of forgiveness still.
right.
Yeah.
I mean, those two seem to be disconnected things. They're
Right.
saying that you can use, if you get $10 million, you can use 25% for non-payroll costs.
correct.
Correct? If you reduce your payroll, they're going to look back and say, we gave you $10 million as it based on this payroll number. You've now reduced your payroll. We're going to pro rata eliminate some of the forgiveness, correct?
Right.
Well, I think that if you didn't reduce your head count, but you reduced your payroll a bit, then, I mean, your average payroll for that 8-week period, that payroll number is going to be less, which means there's less forgiveness available. I mean, it's sort of that simple. I think, because the forgiveness is based on your payroll costs for that period, plus those other expenses. I think they are somewhat mutually exclusive, but you would certainly want to do the analysis.
Okay. You covered a little bit of this, but we went through this in some of our discussions of the $100,000, the magical $100,000, because the calculation, Chris, and correct me if I'm wrong, the calculation is you consider all payroll costs for employees whose compensation for their compensation up to $100,000, correct?
Right.
So all
Correct.
payroll costs includes, we said that list before. That's good. for their compensation up to $100,000. Now, when we say their compensation, what's included in compensation? Is it just their base salary and commissions? Or does it include health insurance paid by the company, retirement plans paid for the company?
There's still, again, this is very unclear as far as, you know, when we've spoken to banks and just even internally within the firm. But I think the position that most of us are taking is that it's capped at $100,000, including all of those other benefits, you know, pension benefits, everything else that goes into that calculation.
Yeah, Brad,
Okay, so go ahead, Mark.
the statute's a little unclear, but I've been through this with, we've been through it internally. I've been through it with a couple tax attorneys who we read this numerous times together. And ultimately, I think the conservative approach is that it's capped at 100 with everything. However, I have seen one of the banks in the information they're requesting and the way they're presenting the information, they're capping the salary at 100,000 and they're not talking about the other items. So they're saying salary up to 100,000 plus other payroll costs. I don't know that they're right, but again, I think that's something that, you know, we're erring on the conservative side with what we're telling clients now. But I think it's somewhat gray. It's not as gray as some of the other issues.
I'm trying to stick with a theme here on the employees and the head count and not bounce around between the two, but the questions are all over the place. Can we use the current head count numbers instead of the average for the last 12 months?
No, I don't believe so. I think it's during the look back period, which, you know, if you weren't in business last year, then you're going to use January through February 29th. But if you were in business last year, you're going to use the FTEs for that period.
Okay.
Now, again, it could be calendar 19 or it could be that fiscal year period. And that's where we've seen it both ways from the banks as well.
Okay. I'm sure we'll bounce back to some other payroll questions on the forgiveness. Is forgiveness only for the amount of the loan used in the 8 weeks after the loan is dispersed? I'll read that again. Is the forgiveness only for the amount of the loan used in the 8 weeks after the loan disbursement?
It's for the 8-week period for the amount of the payroll that you work through the calculation plus the rent and the other items, you know, capped at the 75% of payroll costs. So it's just for that period.
And the rent, can it be paid to a related LLC?
I would think so. I haven't seen anything contradicting that.
Correct. It says it in the statute, I believe it says for leases that were in place prior to February 15th, 2020. So if they had a lease and it's terms of that lease, yes. If all of a sudden they had no lease and all of a sudden they up their rent to make sure they get more money, you know, no.
That almost goes back to the month by month question. Pretty much, you know, they're going to try and find people that are gaming the system too. You want to be, you or your client, your company or your client, you don't want to have them tagged as being the one that was trying to game the system in a situation like this.
Right.
Mark, you've mentioned the word, the initials, and this is where Sally yells at us for using initials, is FTE. We know that means full-time employee. What constitutes a full-time employee?
I believe in the act they use 30 hours. I would have to double check that, but I'm pretty sure they use 30 hours to calculate an FTE. As you know, some companies would use 40 or 35, but I believe it's probably tied in with where you get benefits, but I'm pretty sure they're using 30 hours. So they're going to do comparisons that way.
And to reiterate what you said before, is that it can include outside consultants, correct?
That's what the act seems to indicate, and that's where we're seeing things from some of the banks where they're in the information they're requesting, they're saying we want 1099s for independent contractors that provided services that would have been provided by an employee. So we believe that. I had somebody send me an article this morning written by a CPA on some site where he's saying he doesn't really think that they're going to include independent contractors. Now, I don't know where he got that from, but what we've seen from most of the banks is that they're looking for that information.
And now, Chris, I know that you were part of an internal memo that was going around, and you said that the bank is going to be requesting, or be prepared, I forgot how you worded it, tax documents. But I believe that the literature, and it may have just been loose literature that I read, just says that you're going to have to provide documentation, including the application says you're going to have to provide or be prepared to provide documentation. What do you think they're going to be requesting as support?
We've seen different things from different banks. Something as simple as tax returns, payroll tax returns, the payroll reports to back up the loan amounts that are being calculated. Somebody said yesterday that the bank was asking for financial statements. So, I don't know why, if any of the banks are going to go that far to ask for financials. I think the basic tax documents are probably going to be, the main things that they're asking for.
Brad, we're also seeing they want formation documents. So we're telling our clients to get those ready, like, corporation papers, I've seen them say bylaws, proof of EIN, things like that. So they have wanted that. Now, for a client that is already doing business with that bank, and if they have any borrowings, the bank already has that information, so they're not going to need it. But I have seen a couple banks say they want financial statements, and personally, I think it's because banks are used to getting financial statements. Based upon the way this statute's written, they don't need financial statements because it's not based on that. There's no guarantees in this loan. There's no backing, no collateral. It's just purely based on the compensation issues.
Okay. One of the questions as it relates to the bank, and again, there's a lot of ambiguity that the banks are coming across. Chris, I think that you had said one time, if I talk to 10 banks, if I get two of the same answers on any particular topic, you're considering that a good day, pretty much.
Pretty much.
Because you're just getting so many different answers from the different banks. And these are the people that are going to be starting accepting your applications tomorrow. Somebody said SBA qualified or SBA, I forgot what they said. The bank has to be an SBA qualified bank, I think you said, Mark?
Yeah, an SBA lending bank. So I think they're called approved SBA lenders. Now, the act said they are going to approve additional SBA lenders to make this work, but I have no idea how they're going to do that and get that done in time to have these banks taking applications when the ones that were already out there are struggling.
If an organization got one of the NJEDA grants, which I don't know how they would get it already if they haven't opened their application process, but let's say that they have, or if they went for the EIDL, are they precluded from doing multiple programs that you know of?
On the SBA side, it's pretty much you can do one or the other, EIDL or the PPP program. And if you take, there are other programs also that are within the CARES Act that if you take one of these, you can't get the payroll tax credit. You can't use the payroll tax credit program or the deferral program. I'm not sure on the NJEDA side if there's any preclusion, but within the SBA, it's pretty much one or the other.
Right. I know that there are some questions specifically relating to Medicaid. I don't know if you are familiar with it. Is there any preclusion if companies are getting Medicaid for nonprofits we're talking about now? So some of the people that are here today are from the nonprofit session yesterday, and I don't know if you guys are have the good enough background in nonprofit.
Well, no, but in the overview that I gave, indicated that nonprofits receiving Medicaid reimbursements are not eligible.
They're
So
not.
they're
Okay.
specifically excluded.
Okay, because that's one of the questions I was just about to read you next. You must be reading my mind, Mark. Here's an interesting one. What is the tax treatment for the forgiveness of the loan?
Non-taxable, federal, and we believe New Jersey.
But New Jersey won't make that decision until April 14th of next year type of thing again?
Well, I actually, somebody said that I think it was one of our partners who said definitively that New Jersey is not taxing it. However, I haven't seen anything formal put out by New Jersey on it. Now, I've been focused so much on the federal side of this, I haven't really been scouring the New Jersey sites, but that's what we believe.
Okay. Is it employee or equivalent? I guess FTE, full-time
I think it's equivalent.
equivalent.
Equivalent,
Yeah.
full-time equivalent.
Okay. All right. So we're coming up on the 55-minute mark, and what I want to just give you any last-minute closing remarks. I know that there's a lot of questions out there. I'm going to provide the questions when we get them. We'll provide them to Mark and Chris and anybody else in our office, because I know that they're setting up a team, or they've had a team to help try to address these. So some other people may be reaching out to you. What I recommend, though, too, is that this recording will be up. Some of the questions that were asked were actually addressed in the presentation. And I can't just keep going through clarifications for some of the questions that were asked. So look through and, you know, we will look them over, and ones that are new questions or we feel we didn't address, we'll be reaching out to those first, you know, just so that they try and get some clarity, because we do want to give as best guidance as possible. Now, I know that you guys are probably swamped and you'll try to get to this as quick as possible, but I know, Chris, I know you have a calculation, that, well, at least one calculation you have to do today. And I'm sure, Mark, you've got more. So do you have, I'll put up your slide with your contact information, not mine, yours. And, do you have any closing comments?
I think my one closing comment would be for anybody out there that's thinking of applying for this. If you haven't spoken to your bank already, talk to your relationship manager, your loan officer, whoever it is that you deal with at your bank, and let them know that you're going to be applying for this, and make sure you're on their radar, and find out from them what they anticipate requiring in terms of information, so that you can have it ready to go. Because again, as soon as they start accepting these apps, there's going to be people lined up. And I keep hearing from clients saying, oh, my bank told me I'm first in line. And I laugh, because I said, yeah, that's what your relationship manager said, but there's 20 other relationship managers telling their client the same thing. And they're probably telling 10 clients the same thing. So be ready, get ready, gather your information, do the best you can, and be prepared, so when they start taking it, you're ready to roll.
Chris?
Yeah, I would echo that. Just have as much of the information ready to go. You know, it's basically first come, first serve from what we're hearing. They may internally prioritize at the banks as far as, you know, who moves to the front of the line, but don't take any chances with that. Just be ready. Try to be as ready as possible for tomorrow if your bank's taking the applications.
Great. I forgot I have to launch one last poll. I'm launching one last poll, and then I'm putting your information up. So if you could just do me this favor and answer this one real quick. What is the most affecting your business? I do like to just try and share this with the other participants, so that they could see and maybe they're not alone. You'll see the second one, B, lack of inventory. Chris and I were told yesterday that from a client that they just can't get inventory, that their vendor's been shut down. So even if they wanted to sell, they pretty much don't have, no inventory, but very limited inventory. All right, we're at 64%. We'll close it out. And we will share. You'll see 51% say lack of customers, 5% only says lack of inventory, 37% said shelter in place. That surprised me. And 7% said has not been affected. So, gentlemen, I'm going to put up your contact information. I would like to thank you for making this presentation. I know that there's a lot more questions still than there is answers, and I'm sorry to the people that are attending that may feel that they did not get a direct answer, but I think that's how Mark and Chris feel as they're reading and they're reaching out to the banks. And you know the SBA is not answering the phone, and they're not getting direct answers. But they're trying to give you as much information as possible from all the sources that they've reached out to, from bankers, attorneys, and other consultants on down the line. So hopefully you did get some information from this. And if you have questions, reach out to any of your service providers, partners, managers, supervisors at Sobel Company. We're happy to try and help out in any way we can. Thank you very much for attending, and I hope that you have a good day, a good and safe day. And that's it. Andrew, you could stop it.